Success in the Markets webinar today. This is being recorded, so if you don't catch all of it or if you're coming in late, obviously you wouldn't hear it anyways, but it will be recorded. I want to thank everybody for being here this afternoon. It's always a pleasure to be able to present these trading ideas and the opportunity to share some nuggets of gold, if you will, to be successful in the markets. So without further ado, let's get started here. The disclaimer: Advanced Futures Intelligence and all individuals affiliated with this presentation assume no responsibilities for your education and investment results. What I always like to tell everyone is make sure that you've got a good education, a sound background of understanding of the markets, so that all of that risk that you have in the marketplace is minimized. My name is Rick Vinecki, and I will be your presenter this afternoon. I've come to the markets with 10 years of experience in teaching and trading in the financial markets. My forte is the specialization of market structure and market profile, or volume profiling, if you will. I teach people how to generate daily income trading futures and accumulation of wealth by swing trading equities and options in the markets also. I teach you how to make decisions, all right, decision-making tools, if you will, that allow you to enter into trades and investments that have a higher probability of success. So that's a little bit about me. Again, it's always a pleasure to be in front of a group of people to be able to share with you some of the success that has worked for me and a methodology that is very powerful in generating daily income in your trading account. Some of the topics that I want to talk about today is defining success as a trader. Now, everybody kind of has maybe their own successful idea of what it means to be successful as a trader. Understanding the flow of markets, why this is so important as even your trade each and every day in the market. There's two stages of market activity. We'll look a little bit at supply and demand and how that plays into the market. Defining your edge, and then I'm going to show you some charts of some trades that we've been taking in the markets and show you really how simple it can be as long as you can learn to wait and identify those areas that you're supposed to be trading from. So as we talk about what makes a successful trader, I like to start with a map, some sort of a game plan, if you will, each and every day. The first thing has to be a methodology that works in all markets and all environments. Whether you're trading the futures markets, you know, if you're trading the ES and the NASDAQ, the YM, or maybe you're trading the corn, gold, it doesn't matter. One of the things that you need to hone in on is a methodology that works through all time frames, all market environments, and a market that you're particularly trading. Or a trading plan each and every day. I create a roadmap for myself each morning when I start out, knowing where I'm going to be trading from. What I'm going to show you tonight is a methodology that takes away a lot of emotion out of trading. One of the downfalls in most traders that I work with have a hard time with is emotion, because they don't have a methodology that is sound enough that they can put confidence in themselves each and every day when they're trading. We're going to talk a little bit, you know, have you had considered risk management? You know, do you consider risk when you enter a trade? You should if you're not, because anytime you put your money in the market, it's at risk. Plan your trade and trade your plan. This goes hand, you know, each and every day. If you have a planned out trade, the success of it is going to be probably higher than just kind of shooting from the hip, if you will. And I always like to say this is not elementary school. This is grad school. You know, a sound education, and what we teach at Advanced Futures Intelligence is not elementary school. This is going to take you to the next level. This is going to be where, you know, the boys become men, if you will. Setting out to reach your goal. I like to show this map because when you think about the founding fathers and as the pilgrims came across the sea, you know, they were kind of going aimlessly, if you will. They knew they wanted to hit America somehow, some way on one of those coasts over there, and when they set sail, they left in the hopes of finding their goal, right? And as traders, we too each day should have that in our mindset. You know, failure of getting to your destination can be caused by several different reasons here. Random guessing. You know, maybe I should go long here. Well, maybe I should go short here. If you don't have a sound reason to go long or short, it's random guessing. No rules to follow. What I'm going to show you and what we teach in our IQ Trader class is how to follow rules. Rules are, you know, are prevalent without us in all scenarios of our environment, if you will. All around us we have rules. How about depending on someone else to make your decision? That's not very good either. Or a holy grail system, if you will, something that gives you a red light, green light. You know what? Those systems only last for a short period of time because they're made to break, right? The Goldman Sachs of the world will figure them out sooner or later. And trading, you've seen the changes in trading just in the last few months. We've been talking about it in our trading room since December and up until now. It's almost like, you know, something major has happened. Obviously, the volume is a lot less. Analysis by paralysis. How many lines can you get on your chart? Super analyzing things, if you will. And it causes you to really be in a state of not being able to make a decision, if you will. And of course, the biggest one is a lack of education. A lot of people will not, you know, take the time and get an education in a methodology that works. When you arrive at success, you know, ultimate goal obviously would be this big pile of money here. But when you arrive at success, you're going to find that you have precise execution. Each day in our map, if you will, we know where we want to go long. We know where our targets are for, you know, target 1, target number 2. If we're going to short, you know, we know where those levels already are. It's that non-emotion, because emotion will eat you up. There's nothing worse than entering a trade and then all of a sudden feel like, oh my gosh, I'm on the wrong side of this trade. Why did I take this trade for? It's because you don't have a map. You don't have a plan, a methodology that defines the rules. And of course, in education, that works. You know, I've used this enough over the years to know that it works through all market environments. And the key, as long as I don't break my rules, I will be successful every day. One of the things to be successful in the market is understanding the flow of the markets. Being in the markets, you should have some sort of understanding of where the markets are going every day. You know, do you have a bias long, do you have a bias short? But understanding the flow of the markets come from the understanding of, let's see what here, the understanding of why the markets move. All right, we all know, yeah, there's buyers, there's sellers, but there's an auction process going on, and it's based off of supply and demand in the marketplace. Just like if we were talking about, you know, cattle for a moment, all of a sudden, if there's a shortage of cattle, what is that going to do to supply and demand? What is that going to do to the price? All right, or this Bentley car? It doesn't matter. Price is determined by the buyers and sellers. The true value, if you will dictate what something is actually worth. I like this statement down here at the buyers establish value based on what? Uniqueness, availability, and what the market will accept. No matter what the item is, it's only worth what someone else is willing to pay for it. All right? Education of product knowledge. Whether you want to be a cattle farmer, you want to be a car salesman, you want to be a boat, whatever it is, education of product knowledge is very important, and understanding the supply and demand for that particular item. That's what we do each and every day. I like to tell people the markets are nothing more than a big auction all day long. I come from a professional auctioneering background with my family, and to see the markets do the same thing like we do at a live auction at an estate or something, it's the same thing. It's all about supply, it's all about demand, and it's about the uniqueness, availability, and what the market will accept. So the markets are moving based on these concepts of the auction process. And we as traders, whoops, went too far, we look for value in market activity. Now, there are only 2 phases of market activity, and it's a good thing that there are only 2 because it makes our job as traders really simple. We identify when the market is in horizontal development, we call that balanced, all right? Or the other one is imbalanced. It's a vertical development. And I have some screenshots here, and I'll show you this, what this is meant by. And again, this is time frame dependent. All right, time frame dependent. And when I teach this in the Trader IQ class, we go through this over and over and over in these charts, and we talk about you know, why this occurs. Well, look at this chart for a moment here. In a balanced market, a lot of people have a hard time trading this. As a value trader, I love these days because my job is really simple. When I can recognize a market that is in balance, it's in consolidation. You know, my job is real easy. I buy the lows, I sell the high. Why is that occurring? Because the buyers and the sellers are being contained with the liquidity that is in the value area for that particular trading range. Now, keep in mind, as I said, it's time frame dependent. It's time frame, whether you're looking at a 30-minute, 60-minute, or I'm down on a volume chart on an intraday basis. The market's doing the same thing. You know, if you were starting a retail store, what are you going to do as a good business person? You want to be a buyer at what? Wholesale, because you want to take it to your store and sell it at retail. You as a trader should be doing the same thing each and every day. You should be looking for opportunities when the market is undervalued in a large time frame, small time frame. It doesn't matter whether you're scalping for a few points or you're trying to hold out for the big swing. It's the same concept over and over and over. So this is a balanced market when we have the liquidity is being matched by both the buyers and the sellers. Very profitable days when you have that, because you know at a certain point when the balance area is broken, you're going to go to what we call a imbalance state. And here's an example of that balanced market of a recent chart of, this was the S&P. Okay, it's relatively equal highs, relatively equal lows. Okay, if I were to draw it on there, just like it was in the last chart, this is your job. This is where the non-emotion comes from. If I know that I'm supposed to be waiting for here and I'm supposed to be waiting for here, everything else in the middle to me is what I call noise. When I teach clients, this is the noise area. If you're going to be playing in the noise, you're playing with, the retail guy. You're not playing with the professional guy. You're playing with the guys who are only in this thing for 2-3 ticks. What you want to capitalize on is being able to make money in the markets. And the only way to put money in your pocket each and every day is, number one, is to be able to put one side of the market at your back and say, you know what, I'm eliminating this side. If I'm wrong, I know where I'm wrong based on stop placement risk management that we'll teach you in the class. But based on what's going on with the balanced trading market, we know where to put our backs at. All right. So as I said, we have balance, and the other state of the market is imbalance. All right. When the market breaks outside of that balance area for whatever reason, and in the futures market, it could be obviously more demand for prices to go higher. I like to think of economic events. Recent economic events. How about Greece? How about Greece yesterday? You know what? The ES market was in this nice balance area here for almost 10 days. And yesterday morning, what did we have? We had an imbalanced state based on what? Economic events, geopolitical, something to disrupt the current consolidation of the markets. So we have those two states of the market. And as I said, we go into this in great detail, balance and imbalanced markets, and understanding how to trade them and where to trade them from. All right, let's go to the next slide here. And here's an imbalanced market. You can see when a market is in consolidation down here at the lows, remember, buy the low, you sell the high. The market is in consolidation, being contained by both the buyers and the sellers. There's enough liquidity in here for the market to continue to trade in that trading range until something upsets that, and the market all of a sudden wants to seek new value. And it will find new value, and it will go back into a balance area at some point when the market has found new value. And again, what we teach in the Trader IQ class is there's 4 stages of this market activity, and it's almost, I don't want to use the word predictive, but it's a way of knowing what the next move of the market is going to be for you. So again, putting one side of the market at your back so you're having a higher probability of success in the marketplace. The market's speaking to you. Are you listening each and every day? Again, this goes back to emotions. All right. If you're truly in tune with the market and have a true understanding through your education of how the market's facilitating trade, guess what? All right, you're going to be able to make successful trades in the market because you've got an education that is sound. It's a methodology that works, and you can, rest assured, come to your trading platform every morning, figure out your roadmap, figure out your plan that you're going to do for the day, and execute on it. No emotion. When the market gets to my levels, I'm going to execute. All right. So are you seeing the balanced areas? Are you seeing the supply and the demand areas? Are you seeing the institutional value and institutional volume? One of the things we teach in the Trader IQ program is the fact of looking at where volume profile plays into institutional value. You and I don't have the ability to move the markets like the institutions do. They're trading with size. But if we know where they're accumulating, you can rest assured know where are going to have a higher probability of the market moving up or the market moving down. And this is where it creates a lot of opportunity for us as traders. So just a plain chart here. What do you see? Candlesticks. Where's demand? Where's supply in the chart? And again, you can, we'll teach you in the class on how to recognize balance when in balanced state, goes from balance to imbalance and then imbalance back to balance again. Those are only two states of the market. You know, I get a lot of clients, they send me charts and said, you know what, I'm not being successful. And one of the first things I'll ask for is, show me one of your charts. Show me one of your charts. And I think this is where you get those statistics of traders not succeeding, is because they try too much stuff. Your brain goes into like this analysis by paralysis, if you will. And we're all, you know, all looking for the holy grail, if you will. You're looking for the golden goose egg to make you successful. And the Trader IQ trader system program that we've developed here is just that. It will make you successful. You know, you're not relying upon, really what you're relying upon is price and volume. Those are the only two things that we get from the exchange. So why are we making it more difficult with mathematical equations of indicators, of things that we should not be really worried about? A true market technician will look at price and volume, whether it's supply or it's demand coming into the marketplace, and make a decision from that. You shouldn't have to lean into, if you will, or lean on holy grails, red light, green lights, or too much indicators on your charts. Something like this. I mean, this just looks confusing. The basis of what we do is 3 lines. It's based off of 3 simple lines. You know, the value area low, high volume node or point of control, and the value area high. You can apply this concept to anything. Go back to the cattle picture or the car picture. There's always a price where somebody's willing to buy something, and there's always a price where somebody's willing to sell something. What we teach you, though, is to be able to position yourself, and again, at the extreme levels when we know we're balanced or imbalanced, and be able to profit from it. This is one of our charts from our trading room that we run, and it's based off of the daily value, if you will. And what it's showing you here is it's showing you how value is being accepted or rejected and how price action is being played within it. The shaded area here represents the intraday value area as it's moving. And you can see as price is being contained within value or out of value, you know, price will come back into value, auction from value area high back to value area low, and vice versa, you know, back to here again. It's showing you where value is being perceived in the marketplace. These 3 lines down here represents, again, the value area high, point of control, and the value area low from the prior day. This is where value was yesterday. Okay, this is yesterday's value. So as the market opens the next day, what can we tell about what's going on? Market's perception is that price action, you know, higher here. There's more demand coming into the marketplace. Real simple, right? Again, this goes into the pre-market prep, if you will, of having a plan or a map of deciding what you're going to do each and every day in the marketplace. Here's some trade examples. This is one of my favorite ones, and it's really a cash cow, if you will, that we'll teach in the Trader IQ program. It's the IB trade. And what the IB trade in a nutshell is the initial balance of the 1-hour highs and the 1-hour lows. Now this came from, this was Monday's trade. This was actually the NASDAQ. All right. You can see the market had gone into a balance state right here. All right. And what happened is we broke down. This black line right here is the IB. Okay, this is the initial. Here's the IB high. There's 2 of them. There's the IB high and the IB low. This is the 1-hour highs and lows. What's powerful about this is number one is that when it breaks the original auction of the 1-hour highs and lows, and you have areas down underneath you that you're targeting, it's powerful because you get short at the IB, you get your stops up over the prior pivots, and you ride the ride down. All right. We had taken profits, you know, twice down in here. There was 2609 was a high volume area that had been untouched from the institutions, 2609. And then again, this low here again you can see is a higher low. Notice what happened around 1 o'clock. Okay, remember what I said about the blue area? This is acceptance of value. All right, all of a sudden we had the value was being accepted in the marketplace. All right, so that's a trade example. That's one of my favorite ones, and again, it's one that's easy to learn. The hardest thing about that, wait. Learning to wait. I've had several traders that I put them on just the IB diet, if you will. Your job is to only trade the IB when it breaks outside of it or below it, or it probes and it fails and you trade. You know, one of the other favorite trades is when we go from IB to IB, which means when we have a failure of the IB low, you have that 80% probability that you're going to go back to the IB high at that point. That's another great one that I'll teach you. Here's another one from this week. This was the same day, as a matter of fact. This is the same IB trade again. This is on the ES market. This is a good example of when the market will go ahead and it will probe. See how it came to the IB. Here's the IB, the black dotted lines. It probes through it, running out the stops from all of the longs who were buying at that level. All right, we bought here. All right, we bought here. Now, one of the first things that you'll learn when you become a market profile or volume profile trade trader is that your target objectives are always back to the point of control. So in some cases, you might not even take the trade based on risk reward again. This is something else that if you don't take into consideration, the trade setup might be there, but if you haven't been educated in knowing, does it have good risk reward, then maybe you should just sit on your hands. But this is another example of the IB trade where it probed, they knocked the stops out of the longs, we bought, we sold for a couple points in here, and then eventually by the afternoon you can see how many times we tried to go lower below the IB. Here's another one, little scalps, $1.50, $2 on a slow day like that, where the market, there's low volume. I'll take $50 all day long on one contract. Just give me the opportunity at it. By the time you get to the end of the day, you've racked up $400 or $500. Just even doing simple things like that, but knowing where to do them and waiting for them, so you're not guessing. It's not like you're going to go ahead and buy here thinking, okay, it's going higher. No, you want to put your back to the markets where you have the highest probability of success. And again, you can see it here again. It came back inside of the value, and then eventually it did continue to move higher, went back to the value area high and even higher at that point. Here's another one from last week. This is another one of an IB trade. This is another good example of showing you how the market, where does it open in the morning in relationship to the prior day's value area? Well, this green line here represents the highs from the prior day. This is the point of control, and obviously the value area low must be down here. We don't see it on the chart. Again, this is the NASDAQ. You can see what's going on. Yesterday's point of control represents where the highest volume node was for the day. That means the number of contracts that had gone off at a certain price. Why is that important to us? Well, it tells us where they think that this market has value from. So you can see that we got long from the point of control. We sold into yesterday's value area high, and the only reason we did that is because if you look at the time of day right here, I remember it was news. I will not trade through news unless I have a big profit going into the market. And a lot of times when I will set up a trade, I'll say, you know what, let's just go ahead and scalp this. Let's just go ahead and scalp it for 5 points or something and get out, and then wait for the news to settle in and see what happens. Because see what happened, even though you missed this move once the news came out, you did get an opportunity again. What? Right here at yesterday's value area high. This is a market that is seeking to find value higher. So you get a second chance. I don't like to take risk. If you've got money, take the money. A deal or no deal, take the money. So having an education that you can lean on a little bit and understanding a methodology that teaches you where to enter and where to exit is half the battle. That's where most traders will struggle, is not knowing where to get in or not knowing where to get out. I don't play this kind of stuff when a market, I'm not going to chase the market. I will wait for the market to come to my level, and I will execute from there. And again, you can see, we look at here. Okay, we sold again back into the IB right here. All right, and if you miss that, here's your next opportunity. Remember, now we're outside of the IB. Again, this is part of the Trader IQ system, is the IB trade. Breakout, oh man, I'm missing, the market's going higher. Well, sit on your hands, because your trading plan, and you've been taught not to chase things because you'll lose money when you chase things. Here's your opportunity, back long against the IB retest. Now go ahead and go long. Target objective is back to the intraday value area high. It's still 5 points. It's still 5 points. But you know what? When you know where to execute from, you may have a little bit more, less emotion, number one. You'll have more confidence. Maybe I'm a one contract player, and all of a sudden when I see stuff like this, you know what? I can go ahead and go 2 contracts. Now I just made 10 points instead of 5 points because I know where I'm wrong if I start to close back inside of it. And when I see the shift of volume and the value area, I know that this market wants to continue to go higher because volume is coming up at a higher level, supporting the price action to push this market even higher. Here's another setup that we took. When a market's back inside of value, right? First target's back to POC. 3.5 points. Again, just little opportunities where you're taking very small risk in the market because you know where you're wrong. And you're putting one side of the market to your back. And guys, if this doesn't get you excited, I think one of the best things that you can do is to not have any emotion in your trading. Being able to just trade, relax, and wait for the markets to come to you. This morning, I tell you what, we sat in the market for almost, I think it was almost noon before I actually took a trade. The market was just slop and chop. You know, if you thought it was going higher, you know, it did eventually break higher. But learning just to sit and wait. Professional traders will wait. I've gone down to the pit several different times in Chicago, and I've talked with traders. You know, there's certain days when if they, you know, we get some economic event that comes out and the market just you know, goes higher, they just walk out the door, because if they're not already positioned in the market, they're not going to chase things. You know, it's the retail guys. The guys looking for 2-3 ticks, trying to gain, you know, trying to gauge the momentum, if you will, or jump on momentum. That's not what I want to teach in the Trader IQ program. I want to teach you to trade relaxed, no emotions, have a pre-planned, you know, plan map, if you will, going into the morning. This is where I want to go long. This is where I want to go short. This is where my profit target objectives are. If the markets come to these areas, this is how I'm going to react, or I'm going to respond to those levels and profit from it. Not chase it. You have to get off the idea of seeing a market moving away from you and feeling like you're missing out on something. You know what? There'll be another opportunity coming down the road. You just need to learn to wait from it. And most of the times traders fail at that because they don't know where the next opportunity lies. And again, keeping the charts clean and simple based off of supply and demand in the marketplace will keep you in that right mindset, if you will. All right, so here, ask yourself these questions. Number one, do you have a map? And if you have a map, you shouldn't deviate from it, period. From education to execution. If I teach you how to do this, then you should be able to implement it. Don't break any rules, because like I said at the beginning of the presentation, a methodology that has rules, don't break the rules, don't go through the red light. You know, that's why they have a stoplight. That's why there's a stop sign there. You know, we all tend to want to break rules. But when you have rules in the market and you know where you're supposed to be trading from, then don't break your rules. When you break rules, you'll lose money. When you keep your rules, you'll make money, because it's already planned out. People used to tell me, you know, Rick, once you arrive to a certain point, trading will become boring. You know what? What I find in the trading this way is that you have a lot of other time in the day to do certain things. You know, maybe, you know, read, because you can wait for the market to come to your levels. Just wait. And this way here you can be more profitable. It doesn't take very many trades a day to be successful. If you want to make $500 a day, it doesn't take very many trades to get you to that point. And if you wait for the good setups versus taking one contract or two, all of a sudden you've just doubled what you thought you might have made. And again, understanding price and volume. I can't stress this enough. Price and volume are the only things that we get from the exchange. And if you can become a student of that, of understanding of volume and what it means to price action, you're going to be that much further over each and every trader out there that is trying and probably struggling in the market environment right now because of some of the issues that have been changing in the market. You know, and being able to recognize when there's change and being able to change your map or your plan each and every day is what is important. Supply and demand, and what does it mean to us as market participants each and every day? We've seen what has happened in the last few weeks, demand for something. You know, and we'll give you examples in the Trader IQ system. I like to use a lot of examples in using equities. You know, we can really tie that concept in very strongly when we talk about supply and demand and what that really means. Keep it simple. Why convolute something that really is simple? If price and volume is the only thing we're concerned about, then why should we make it more difficult on ourselves with, number one, with a bunch of stuff on our screens that's really analysis by paralysis? It's confusing our brain. Get it off the screen. If it's not helping you and it's not making money, get it off the screen. And then, of course, get an education. As I said, the whole idea behind this is in order to be successful, you have to have a methodology that you, number one, that you believe in, that you have, you know, studied, that you have worked with someone, that you've gone down the road and you've seen it over and over and over time again, how it really does work, and learning to wait for those opportunities to present themselves. So opportunity knocks for you today. As I said at the beginning of this, I always get excited because I love to teach this to people. I love to see people succeed because I know not very many people will succeed in the markets because of several different reasons, but one of them is most of all is an education, an opportunity for them to succeed in knowing, it's just like any good athlete. Tennis player, baseball player, they've got a coach there cheering them on, leading them down the path. You can go down the wrong path and try to learn from losing money in the market, or you can get an education and have an idea of where you're supposed to be trading from each and every day. So our Trader IQ day trading system is designed to do exactly that. We're going to run classes on Tuesday and Thursday evenings starting at 4:30. We've also had some people asking about maybe a Saturday class, and I'm going to keep the classes to 20 to 30 people. I don't want to go more than that because after we go through the class, and just by the way, the class is going to run between 2.5 to 3 hours each one of those nights. You're talking about 5 to 6 hours depending upon what we have as far as question and answer, because sometimes you're paying for the class. You should obviously ask questions, and sometimes that will go over. And again, the size of the class for a reason, because after this period of training, you're going to come into the trading room and you're going to get this to reinforce it for the next couple of weeks. That's going to be included in the price. So we're offering right now 25% off that regular price at a $750 for the Trader IQ day trading system. So this will get you, set up, knowing what you're supposed to be doing each and every day, and being able to trade from those levels where you're going to have the highest probability. All right. So that's your opportunity here, and again, my chance here to be able to help somebody today. Hopefully I've spoken to you. You feel the need to be able to go to the next level, if you will. If you're struggling, especially in these lower volume markets right now, it's more important that you be able to take successful trades and not take too many of them. I've seen guys' statements where well, I made this much money, and then I look at how much commissions they paid. I mean, they basically paid their broker as much as they would have made. And the idea, I don't have anything against brokers, believe me, but if I can keep more money in my pocket and trade less at the end of the day, that's what I want to do. I want to take care of my family. I don't want to take care of my broker's family. He'll get it from somebody else. So I want to open it up to question and answers if you guys have some questions. And again, I want to thank you. There's my email address, rick@advancedfuturesintelligence.com, or go to our website. If you have any questions, email me. We're doing this class right now. It'll be this for March, and I'm not probably going to do another one until maybe midsummer, and I don't even know based on that, because what happens is I have a boot camp that I also do, and based on that ties up a lot of my time. So, in coaching and working with people, I'd rather make sure that I get people that are successful. So, it's not about the number of classes or how often. I don't want to put them on the, every week we're going to have this class. No, that's not what this is about. I want people who are serious about wanting to learn and succeed in the market. And I want to work with those people to make them successful. So, like I said, next week we were going to shoot for Tuesday, and we're going to shoot for Thursday for the first class. And again, as that gets worked through, and then we get you into the trading room, it can be several different months. I don't have any, next class, if you will, on even the schedule. I just want to get you guys, those who are really serious, who took the time today to come to this, and they would be the first ones to go into that class. All right. All right, if there's any other things, charting software, we have indicators that run on the NinjaTrader Trader platform that show us the intraday value areas and all of the stuff that we need to look at. So we actually had it running on TradeStation for a period of time, but programmer doesn't want to support it anymore. And again, it's not so much, I'm not here to try to sell you indicators or to try to sell you on a platform. It's no different than going to Home Depot and you buy, a skill saw or a welder. Okay, now you're going to bring it home and you're going to weld. You can have all the tools in the world. If you don't know how to use them, what good is it? Right? So it's more my job to teach you how to use the tools. Right? How to use the tools. Yeah, NT 6 or 7. Right now we're on 7. So 6.5 I should say. We're on 7. Volume at price, well, it's an add-on Henry. It's an add-on indicator, if you will. It's an add-on indicator. It's not something standard within NT. All right. We have several different, Josh, several different packages for it. The base is $89 a month, but there's some other things that you can get with if you're part of the room, because a lot of people want to be part of a trading community where they're sharing in the ideas and they're helping each other out and build a community where let's face it, this is really not a Lone Ranger game. This is team sport, if you will, and there's more than enough opportunities. There's more than enough money to be made in this market that we can help each other out. We have 50, 60 people all helping each other out at one time. It's still not going to make a dent in the market. It's not going to matter. I am a profitable trader. I actually have traded for people. I've also traded for CTAs, but I find that I just would rather trade for myself, because I have a little bit of a problem with taking only 30% of something when I'm making 100% in my own account. So I don't want to talk about that really right now, but yes, I am. And I've only been asked to do this because of you go look at the past performances of what we've done on a $10,000 account. Last year was up 300%. The prior year before that was 200%. And again, you may or may not get every one of those trades, and I call a lot of trades sometimes that people don't take. So the idea is behind it, though, George, is that you have a methodology that that you're taking successful trades from, period. You're not chasing after stuff. You're not looking for some holy grail that, when the light flashes blue, that I'm supposed to buy. It's being able to give you and equip you with the tools and methodology to make you as a successful trader. Okay, any other questions? I appreciate everybody sticking around. I wanted to keep this short and sweet for you, but I wanted to give you an idea of how you can be successful with, again, a methodology that works through all market environments, time frames, and again, it's really kind of simple. You put those 3 lines together with the balanced and imbalanced state, and you just go to work each day, and you make your job real easy, make your money, walk away, go do something else. All right. Well, thank you, everyone, and we appreciate you being here, and we will see you in the class. All right? Have a good evening, everyone.